You're entering the future-ready CNBC TV 18 Ebix Cash Studio.
Hello and welcome to Taking Stock. We are coming to you from the Ebix Cash Studios. I'm Prashant Nair. With me, my colleague Surabhi Upadhyay. It was a sea of red on Dalal Street with the Nifty and the Sensex seeing sharp cuts on Friday. For the week, both these indices ending over 3% lower. Nifty IT index was the only one to buck the trend and end in the green on Friday and for the week as well. All other sectoral indices down in the red. Surabhi, hi.
Hi, Prashant. Yes, absolutely. Quite a week and quite a day. I mean, Friday was an end in the red and deep in the red. We have lots to talk about as we get through the next half hour. Here's what the lineup on the show is looking like today. We will be joined by Andrew Holland of Avendus Alternate Strategies, as well as Jay Bala of Cash the Chaos. So we'll get you perspective and advice both on the fundamentals as well as technicals. We, of course, got a lot of market opinions through the course of the week, and you will hear out some of those voices. Shankar Sharma, Sanjay Mukim of JP Morgan, and Ramdeo Agarwal of Motilal Oswal Financial Services, to name a few. But before we get to all of that, let's just rewind the clock and see what happened. 5 trading days and largely cuts coming through at the end of it, between 3% to 4%, depending on which index you're looking at. So let's look at the tally first of all. For the week, the Nifty is down about 3%. Nifty Bank, as has been the case, has been falling a lot more. Mid-cap, small caps, nothing was spared in this market. It was classic risk off, and you could blame a lot of that onto the way the global picture is shaping up. That, by the way, is the FII picture for the month of December. We're again down to some of the highest levels of selling that we've seen in this calendar year, almost approaching 13,500 crores of selling in December, and the month is not even over. The previous high was in October, but remember, we still have another couple of sessions to go, and everyone's waiting for the foreign investors to perhaps get on their holiday so that selling abates. Very quickly, so what bothered the market this week? 2 things. First, the reality that there is actually accelerated taper underway. The market didn't, in India and around the world, didn't exactly react immediately after the Fed announcement. The reaction perhaps, and that reality was sinking in, the reaction really played out on Friday. The other, of course, issue with the market is the Omicron spread. The headlines keep coming, and there is a lot of anxiety, perhaps, on the kind of economic disruption, the travel disruption that this is already beginning to throw up. So I guess, Prashant, putting some of these sort of points together, it proved to be pretty much a bear cocktail this week.
Well, that's well put, Surabhi. Bear cocktail. I mean, but just 2 points I want to make before I toss it to my colleague Sonal, who's standing by to run us through what happened in terms of stocks. The big worry for the market is this. It's something I've come back to over and over the last 2 weeks or so. And the graphics will come up on your screen, are financial conditions tightening at a time because interest rates are rising across the world? And you have this new variant, which is starting to lead to some restrictions, especially in Europe for now. So if economic activity does get hampered and rates are going up, I mean, that's a unfavorable kind of combination to have at this point in time. Nifty levels, we've spoken about lots of levels, but basically nothing held. And I think if you want to take a look at something, nothing sacred, but the December 6th low was 16,891. If you want to keep that as a marker. So that's some stuff to keep an eye out for. But 2 weeks 2 weeks left for the year to wrap up. And I think the general sentiment is, with the FII selling being relentless, who wants to stand in front of it? And I think Friday's session especially gave you an indication that people were finally throwing in the towel because it was a broad-based cut that we saw. But as I said, let's throw it across to Sonal Bhutra, who's standing by to take us through this week's stock action. Sonal, over to you.
Well, yes, interesting moves in the market and largely a down week for Indian markets, but a couple of them saw larger selling pressure. So Nifty Realty, the top loser, down 8%, followed by Nifty Media. The FMCG pack was also under pressure, so that particular index down 4.5%. The only sector which did well on Friday and the entire week was Nifty IT. That index up around 2%. Let's talk about Nifty movers, and of course the IT names did really well. So we had Wipro up 5%, Infosys and Tech Mahindra, Power Grid and Sun Pharma were the other big gainers. On the flip side, the losing list was, of course, longer. So Bajaj Twins were the top losers, down 7 to 8%. ITC, not much came out of that analyst meet, so some disappointment there. Stock down 8%. The other names included the financials. So HDFC, the heavyweight, down 7%. So was IndusInd Bank, down 6.5%. In the broader markets now, if we talk about the gainers, the list wasn't that long. We had, again, the IT names that did well. Persistent Technologies, L&T Infotech, Emphasis, Birlasoft up anywhere between 5 to 7%. Navin Fluorine was up just 1% this week. But on the flip side, a lot of pressure in a couple of these financials again. So Shriram Transport, M&M Financials down 10 to 15%. IEX, PVR were the other big losers. And also some of these banking names. You had Bank of Baroda, RBL Bank, Union Bank down anywhere between 9.5 to 10% this week.
Sonal, thank you very much for that. So that's the damage this week. Andrew Holland is joining us right now. Chief Executive Officer, Avendus Capital, Public Markets, Alternate Strategies. Andrew, great to have you with us here. Thank you very much. Is bulk of the damage already done, or you see more downside going forward?
Yeah, I think there could be some more downside, not necessarily just for the Indian markets. I think what we're grappling with here, Prashant, is it's two things. One, has the Fed already made a policy misstep in terms of it's been slow to kind of raise rates? So I'll look to tighten liquidity. And at a time now when it's looking to tighten liquidity, is it going to be too aggressive when the economy could be faltering? So I think that's what we're going to grapple with. I honestly get the feeling that, when you've been throughout most of 2021 saying inflation's transitory, and then you change that narrative to say, let's forget that word now, you're behind the curve. And in terms of the unemployment, yes, it's still high, but I think they've also missed the fact that underlying that was wage growth. And that's what that's what the Bank of England kind of came out and said yesterday. Listen, this is a lot worse than we expected in terms of inflation. So every time you have interest rates rising around the world, and you go back over time, you will find that riskier assets are the first ones to fall. So from emerging markets